All right, good day, everyone. So this is Anne, and also I'm here with my husband, Mohammed.
Hello, everybody.
All right, so we would like to share with you a simple technique on how to trade the liquidity based on a higher time frame candle, such as from weekly, daily, up to H4. Well, if you are a scalper, you probably can find it also on H1, but I will give you an example based on daily or H4, probably also on week 1. Okay, this was the topic that we planned to discuss during last week's Zoom call. Unfortunately, we both fell sick, and I'm actually still recovering. And sorry, this subject actually will become a part of the big course that I'm currently working on, but I feel it's important to share with you all right away. So it will be a part of the tips and tricks, but I guess it's no harm to share it with you right now. This technique is particularly useful for beginners who wish to trade the liquidity with ease, and in the future, I mean, in the big course, I will share more complex liquidity trading strategies based on the market structure. But nonetheless, I'm confident that many of you will be surprised at how easy it is to trade liquidity by using a single candlestick from a higher time frame. All right, so without further ado, let's get started with the technique. And before I explain to you the one candlestick technique, I want to show it to you the regular liquidity that we know. I already write down over here. Liquidity means how easy it is to turn something you own into cash quickly without making its value go down. In trading, having liquidity is essential. When people buy and sell things in the market, it helps keep liquidity flowing. The market is constantly changing because people buy and sell at different prices. The price of something goes up or goes down depending on how many people want to buy it compared to how many people want to sell it. If more people want to sell than buy, the price will go down. If more people want to buy than sell, the price will go up. This happens because the market is always trying to find a balance between buyer and seller, which keeps the market stable. So I'm sure so many of you have noticed this pattern, okay? I always mention anything related to the market, the movement like this is pattern. So this is, we know, is a liquidity. We call this like a swing, right? Excuse me. So this swing structure, sometimes if the price about to go down, we find a lot that ours hit a stop loss because of this. I call it liquidity shit because it feels like everywhere, excuse my language. So, and then if the price is gonna go up, sometimes it take out the price, here, the last low over here before it goes up. And there is another type of liquidity, which is equal high, equal low. Well, it's not precisely equal, so we usually call it relatively equal high or relatively equal low. And then if the price is gonna go down, it usually take out the last equal high over here and then going down. And then if it is going up, the price usually taken out the last low, something like that, right? And another type of liquidity that we have heard a lot is that the trend line, the trend structure, something like this, the price is gonna go down and we thought, okay, and then here, and then it's taken out. People who do not realize this, they call it as a breakout, and instead of selling, they would buy because they thought it's a break of the trend line. And the same thing here for the bullish, the price making a higher high and higher low, and then it break below, and they thought, oh, okay, this break of structure, actually the price is gonna go higher. So nevertheless, we have facing all this kind of a structure pattern, and it's really not easy, right? And including myself, until now, sometimes we have been like fooled, oh my God, until it happened, and then we realize. And then people usually just use liquidity as a reason, like, oh, this liquidity, that liquidity. So, and that's why that sometimes in the community, they always say that, this is liquidity shit, because it seems like to be everywhere. So we came up things like how to actually make it really easy to find the liquidity. So basically, a good order block or a good trade is that if the price is gonna go down, it should take a liquidity. It should take one high. So probably over here, there should be an order block. Oh, sorry, hold on a second. Oh, why I cannot draw? Okay, hold on. Yeah, probably here there is an order block or supply demand here, the supply, and then here there is another order block below this, and there is another block over here, and then taken out the last low. So they said a good order block is it will work and it has high probability if the price taken the last high or the last low, you know, but it can be really tricky. So I was thinking, okay, how to make it easy. So right now I'm going to show it to you here. Probably it's not really the secret. Probably some people already find this way as well. So consider this is this is in an uptrend. You want to find this pattern, okay, where the low is taken out by the wick, another low. The next day, if this is daily, the next candle, the next day, which should be over here, it has a higher probability to go higher. Now imagine if you find this kind of pattern on daily, for example, or on H4, when you know the next candle has a higher probability to go up, it would be great, right? Because so you do not have to think of all this pattern again if you do not want it to. And you just looking at the higher time frame candlestick, candle like this. There is a low, one candlestick low taken out by another wick over here like this. The next one usually going higher. But remember, it should be a wick taken by a wick, not a body taken by a wick, okay? Wick to wick. So here, and sometimes if this one does not work, probably the previous candle before this, the wick is slightly lower, but still taken out by this, I would consider that as a liquidity being taken, okay? Now, this is the pattern for you to buy. We are going to the real market after this, but I just want to show it to you. Like sometimes this candle is a bearish candle, okay? So if this is a bearish candle, you do not want to directly buy here. You want to wait, the next one must be bullish. So in an uptrend, you want to see a wick being taken by another wick, and the candle must end up bullish. If the candle is bearish, you want to wait, the next candle should be bullish because sometimes it's bearish and then going lower, okay? Now, in a downtrend, you want to see a wick taken by another wick and then it end up bearish. So the next candle, usually it will go lower. So by knowing this, you have a higher probability, especially when you sniped it in a lower time frame, it can easily give you at least 1 to 5. You will check it. Does it always work? Well, of course, like any other market can do anything it wants, even though that they call it like by algorithm, the market is not random, but we as a human being, we don't know, right? So, so far that I've been testing this, and so many of them, if it doesn't work, usually the second one is working. So many of them working directly. So I'm gonna show you a screenshot. Hold on a second. Look, something like this. This is for an uptrend, okay? Look, this is, and it doesn't have to be a bearish, but in this case, it was happened to be bearish candle. But the most important for an uptrend, look, a wick taken by another wick. So I consider this like a break of structure. Let's say this is a break of structure. A wick taken out, and the next candle end up bullish. Usually the next candle, so you want to trade at the beginning of this candle, okay? On the lower time frame, you look left, there's usually an order block around this area, and then it will go up. And then here, another example, here a wick taken out, and then it end up bullish. You want to start looking at this candle. Like this, you do not see anything, but you want to see this kind of pattern, okay? And do I have for bearish? I don't think I have it for bearish. Yeah, sorry. Both example are from bullish. Like this is a good example. Here is bearish taken out, but the candle that taken out is bearish, so you do not want, you know. So the next candle must be close bullish, this one. So you started from this candle. All right. Hi Tryon. Yeah, is there anything you want to ask, or maybe you wait until I finish the explanation? Okay. So let's go right now to I will just reset this chart. Okay, so this is Great Britain US dollar, this is gold. Let's see. I did not trade the last 1 week because I was sick. I guess I have not really, I trade, but only 1 or 2 times for the past 2 weeks because I was sick. So let's see. You see that by quick inspection, we know that this is an uptrend and this is a downtrend. You see now, I want you to take a look at this. Let me just make it big. Okay, here is an example. Here, the wick taken out and then it goes down. So you started from here. Let's mark this one. So you start from this candle. This is daily or H4? Okay, this is daily. Okay. Now let's say you go to H1. Right. So this is a wick taken, and then here is H1. If you do not see any order block, you can go to probably to M30, M15. Here, there is an order block because this is the break of structure with the body. You see, this is on M30, not M15. You see that? So if you are taking, like, for example, 1 to 5, hold on, where? Here. Why it's so difficult? Here. Well, anyway, the idea is that when you find that kind of pattern, a bullish, a candle, a wick taken out by another wick, and it end up bearish, you can focus in whatever time frame of your choice, only selling for that day, for example. And let's take a look again on another example here. I want to see that something that is not working. Here is taken out. Yeah. This was taken out. Let me make it bigger. Here is taken out, and here is taken out. You see that? This is bearish, so here the next day is bearish. Now, here is taken out, the next day is bearish. This is not really, is there a wick in there? No. No, I would consider no. Now, let's see, even though it is in a downtrend, sometimes whenever you see the market that taken out by another candle like this, it would going up, you know, the next day would going up, but I do not recommend. So you just want to follow based on the trend. If you are very, very new to trading and you want to trade like the easy way, because I don't know if it is bearish or bullish, you know, like the market, I have prepared indicator before. Hold on a second. You can, you know, a long time ago, before you know, everyone must start it with any indicator. If you are directly trading without indicator, then you are Superman. You know, so I usually use long time ago using the indicator 5 and 12, right?
Yeah, 5 and 12.
Yeah, 5 and 12, long time ago, we used the indicator just to define the trend. You see, like right now, basically here, the black one is that if you are confused, for example, about the trend, because basically, if you want to use this strategy, you do not want to do it like, let's say, even though on the sideways market, here is, no, this is not a week. Okay, so look, this is sometimes that you want to see the market in the clear where there is a gap in between the moving average. That way, you will know for sure that you have a higher probability where the market could go higher or lower. All right, like I don't know, I don't see around here that could go this one, even though it is at the top. You see here, even though it is at the top, and there is still a gap in between the moving average. The next day it goes up. Now let's see on H4 if we go on H4. Yeah, but basically, you know, for the 200 EMA, the moving average is just personal preferences. I'm just giving you an example for the new, for beginners who are liquidity, because it can be very confusing. Well, you will want to learn like even on H1 if you want to trade it on, for example, now let's say around this area, okay? Around this area, look, there are the gaps. Here, there is the gap between the moving average 5 and 12. So you only want to buy. And around here, you only want to sell. Now, when to buy, when to sell is you want to wait this liquidity taken by another candle like this. So here, this is the liquidity taken. So you started from here. So if you started from here, you only focus on to buy. And basically, this is also an order block has been taken out. Look, this taken out, taken this one, and going up. So you can make at least 1 to 5 by doing this. I personally like to do it like based on daily, so I do not have to really sit down in front of the computer. So based on daily, in the groups later, we can always tell each other, for example, on GU or EuroCAD or something like that. So there is a higher probability that the next day will be higher, will go lower or higher, and then you can work on it like based on this one candle, that you can focus the next day your trade direction. Okay, so basically whenever you trade, so let's just you see when you are not accustomed with the indicator anymore, it makes you a little confused actually when you use that. So basically, let's say here, this is I will make this really big, this one, right? I want to see what is not, okay, this one is not working. You see, I want to show it to you that sometimes it is not working, but you rarely see it will happen like 2 times, 3 times, 4 times not working. No, so many of them, it doesn't work like this, right? Look, this is going up and it's still taken out by this. And the second one, usually working. Well, you really need to check it all by yourself. Like I said, if you are afraid to what is it? It will hit a stop loss. Then you want to add moving average, whatever value that you want to use. I suggest you to use 5 and 12 because that was the one that we used a long time ago. And then now here, okay? So basically, whenever you see a low taken by another wick here, another wick, this candle is our point. This particular candle, this one is our point, okay? So when you start trading, you will start it from this new candle. This is from H1. Let's go maybe to M5. Where is it? Hey, okay. Why? Wait a minute. There you go. All right, here you go. Now, we started from here, right? We could be late a little bit here. Look, because we started from here, basically this can become our order block. But here's the thing, okay? Sometimes we are late. So the trick here, if we want to enter and then there is nothing, what we want to wait, we can wait for another pattern, the same like that. What I mean by that is that, let's say, let go, no, because it was here, right? Let's see on M15. Let's see.
Like shooting.
Yeah, like shooting, or even, yeah, because I never do it on H1, so also I'm not familiar, but
maybe M1 can show you something.
Okay, M1. Oh gosh, do I hit M1? Come on. Okay, here you go. All right, now I want to give you, I want to tell you something. Like here, we started in this area, right? We started in this area, and then so you want to see, like, okay, here is the break of structure, and then this order block is our first order block, and then it didn't hit, right? This was our first order block, and then there is another break of structure, and you just keep going over here, and here is our order block that is taken like 1 to 5, sometimes 1 to 10 if it is on a much lower time frame. But I barely use M1, to be honest. I usually use M5 because from excuse me. So usually from D1 and then you go to H1 alone still can give you 1 to 10. You know, like on average is 1 to 5, 1 to 10. But imagine if you go to much lower time frame. Look, you do not need to score a very high risk reward, you know, so you just want to make a constant winning. And by doing this, it will be like quite easy for anyone. Look, another trick, like because this was from H1, right, around this area before, and let's say you missed the chance, like over here you were missing the chance. What you want to do, you can actually make an entry based on the same candle again. Now this is the one which is obvious. You see that? This candle over here, this candle is break the last week, right? It breaks low, so this is your entry. So you can just make it a direct entry based on that type of candle again that is taken the last week. See the week taken. So this is the point itself is an entry candle if you dare to do so, you know, like, but you do not want to keep doing that just for the heck of it. It is better using like supply demand or the order block, following what you usually do. But in this case, when you go down to lower time frame from D1 to H1, you do not need to think more about like all this liquidity, the pattern. You know, I like to trade simple. So if this one is working, and they said, so if a good trade is there must be liquidity taken out by the price. So, okay, so I'll try to find tricks to do that. So why not just doing this, you know? So that's why, so we always frequently hear about the smart money concept, where an order block to work, we must identify the price, sweep by liquidity, and then there is inefficiency, which is also known as a gap or FVG, fair value gap. Although this is also not always the case, it provides us with a high probability. But by looking at this pattern that I'm showing you today, you eliminate the need to identify the liquidity, which can be challenging and perplexing for many traders in terms of determining which liquidity to take out. Okay, I want to know, so what do you think, guys? So this is basically like what we want to share with you today. It's not really that complicated. It's very easy, right? How do you like it? Excuse me. Yeah, you really want to try it. You really want to try it out. And I guess, is there any question? Because that is all like what I wanted to show it to you. It's just two candle pattern. You're welcome. Is there any question? Yes, it's valid for any time frame, but I would suggest you do not trade it just like that. You want to know, to let you know the market bias for the next candle, just for the next candle.
Exactly. Like if you're taking it from D1, so that gives you the market direction for the next day, but it doesn't mean the market will continue going up or going down for the next week, as for example, you know, so you don't want to use it randomly.
Yes. So, okay, basically what you want to do is that you just want to see candle by candle, but on a higher time frame. Like my husband said, if, for example, let's go to, okay, let's talk about this one. Okay, this is weekly. This is weekly. The week is taken out by this week. So the next week on GU, one whole week, you can focus on only on buy. That's the idea, you know. So, sorry, copywriter, we are not using indicators. So this is just exactly by candle. So I'm going to. Do you think I should just upload it to YouTube?
Yeah, we can.
Yeah, okay. So we are going to upload this to YouTube, even though this is actually a part for the course next time as tips and tricks. Because before all this, we want to share with you the the importance of the market structure, how to really read the market structure, the substructure, the minor structure, and how to read the swing high, swing low. So for you, and then to combine it all. But this is basically is just a tips and tricks to summarize everything. And yes, yeah, you know what, this does not really need anything like that. Basically, let me show it to you on GU. Okay, where is it? Because I didn't trade this week. Is there any? Okay, here, right? This is an example that doesn't work. The wick is taken out, right? The next day should go lower, but it go lower just a little bit and then going up higher. This is an example that doesn't work. Now I want to show it to you. Let's see, maybe on here. Is that a wick? Oh, no. Why? This one is not me. Yes, it's better to do it on daily. Now, take a look. This is gold, okay? This was on Monday, March the 6th, okay? Look, the week, the previous day week on Friday was taken out here on Monday, and the week was higher, but end up bearish. This indicates the next day that the market will go down. So this day on Tuesday, so you find out when the market closed on Monday. So meaning the next day, you only want to sell.
And this is also good if you are trading internal structure, but what's that, counter trend? You know what I mean? It can be helping to take advantage of the market for 1 day or two.
Yes.
It is counter trend.
Yeah, like this. This is an example. Take a look. This is a wick taken by a wick, and here end up bullish, meaning the next day will be buy only, bullish. You see, and then here also, here a wick taken by a wick and end up bearish. The next day should be bearish. Does that make sense? Because what is it? I think the week, take the week, it happened where there is it could be you can take this week taken out by the week. To me, I consider this as liquidity, you know, because it said that we have you know, we want to see that the price swept by liquidity. So here, a wick is swept by the price to go down and then going up. Exactly the same like the picture that I have shown it to you previously in early video. But this one, which means that over here, the next day, you only want to buy. So here, let's see here, okay? Let's just see one by one here as an example. So here we know on Monday, a week taken by the week and it's bearish. So the next day on Tuesday, we only want to sell. Let's go to H1. You see here is the break of structure. Oh gosh, why? What? I'm not really good at using this here, okay? This is the break of structure. So where is your order block? This is your order block, right? Take a look what happened the next day. This is the starting the new day, right? And imagine if you are looking to the much lower time frame, like how much you still have, because this has already happened. But that this is obviously if you take it exactly by what? please don't draw. It makes me confused. Well, anyway, anyway, I don't know how to do that. Okay, hold on a second. All right, thank you. Don't draw on my board, please. So anyway, you know, so here is a week taken by the week, and now I am drawing also. Okay. So now let's go back to D1 again. At the stop loss take profit, because we enter based on the order block, it is the same, right? So this is our order block. It's just the same. Our entry is based on the order block. So this is.
And the take profits is really up to you. People recommend to take big.
You know,
something big.
Yeah, I personally, you know, 1 to 3 is good. 1 to 5 is very good. 1 to 10, you know, really wonderful. Like
if you want to go big and do trailing stop, it's okay. If you want to aim like the next low, next high, you know, it's really up to you when it comes to the take profit.
Yes. Yes, exactly. So you can manage the also target higher time frame. Right? So the way you trade it is really up to you. I just want to tell you, like, okay, here is, you can start looking for the next day, it's only sell. It would be wonderful, right? If you know the next day is going to be sell and you just focus on sell. So you do not have to spend too much energy to analyze the market, because I really like to analyze in a simple way. And so this one, okay, if you think that for an order block to be work perfectly, that has high probability, we have to see the price to be taken out. Like basically, look at that. This price is taken out, right? Over here, taken out, and then going down, and there is another break of structure, taken out and sell. Yes, Mark, we will post this recording on YouTube. Look, today is my husband's birthday. This is my birthday, so I supposed to just not hold the Zoom call, but I forgot. So
okay.
Yeah,
because we postponed it for the last 2 weeks, so we cannot just keep doing that.
Yeah. Okay.
Thank you, guys.
Thank you. So we are going to have a dinner with our friends in a while after we finish. So let me show you one more example. Okay. So here the week was very soon. I will.
Oh, really? Happy birthday in advance then. Or I wait until tomorrow.
Okay. Look, Mark, I will screenshot that. Okay. When I come to dinner, you take me for dinner. When I come to Denmark. When I come to Denmark, not when I come to. All right. So guys, look at that. This is an example. This is the week taken by the week. And then the next day you trade on here, buy, right? So here we go to H1. Over here, now here, ours is here, right? Hold on a second. So there is, it didn't hit because we started in here, right? But what happened is that here we just keep following. There is what is it, the break of structure, and or you can go to M15, for example. Wait, where is it? No, that one is the sell one. So where? Okay, here you go. Look here, we started here, right? Look, Tryon, you really like the week, right? Over there. You like to put the OB
which is
as
working
the week. Yeah,
which is
it's working most of the time. Is actually very good to always take the week, because this is the order block based on market continuation. And then if you take this, you will lose. You lose one, for example, and then here, and you just keep continue if you want, break of structure, because you know that day the market could go high. And then on the other hand, if the market could go will go down the next day, you just can keep looking on the market continuation, which is sometimes you do not need like liquidity shit. Excuse my language, but I really hate when we always keep talking, this is liquidity, that liquidity. But anyway, so
yeah, but guys, if you miss the entry for that specific day after you see that week taken by another week, you don't try the other day. You try to find the same pattern maybe in another pair, or just wait until it is formed again in another day. You don't challenge it.
Yes.
You know?
You don't challenge, like, for example, just because
you saw it the day before and you did not get the trade, and then you think, okay, the day after I will try again on the same market direction.
Yeah,
I wouldn't recommend that.
Yeah, look, for example, here, okay, even though this one is working, keep going down, like over here, but is going up. So you just want to use it for the next candle only. That's why that's why you just want to make use the movement for the next one candle, be it H4 or weekly or daily or H1. If it is, for example, let's say you want to look at this pattern on M15 and then you trade it on M1 or even 15 seconds, but just use for the next 15 minutes, not for 1 hour. Does that make sense? Yes, it applies to all pairs, any pairs.
Other factors we consider on the week before the other week. No, I don't think we have any.
Yeah, but I share it at the beginning, the rule, like what kind of week, like if it is bearish and then the next candle will be bearish, but if the candle is bullish, wait for the next candle to be bearish if it is in a downtrend.
Just the point of it is to make an easy setup.
Yeah, it is an easy setup. How do you like it, guys? All right, I think there is a delay because our internet sucks. Yes, step 1, identify direction for trades by looking for liquidity sweep, and the candle close for the day should be in the opposite direction of the liquidity sweep. Once direction, yeah, you can take it, or you can watch again this video once I upload it.
Yes, exactly.
Okay, so
yes.
you try to back testing or tried it, and we can share it in the group. All right, so guys, I think that is all. So we are going to get ready for dinner with our friends outside. There is a birthday boy here. So thank you so much for coming. I hope that this knowledge is useful. Now that we have this strategy, we have shared the strategy with you, so we will begin sharing more auto block based on the strategy via our alert, and we can discuss our entry in our discussion group. All right,
you're very welcome, guys, and thank you so much for the birthday wishes to me. Thank you so much.
All right, thank you, guys. Bye-bye.